This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning, being propelled by the better than expected jobless claims report, falling 10,000. Overall, though, we are seeing a tendency this week for the first time in, I would have to say, months, that futures may be underperforming bullish news when we do get it. So we'll see if that is the case today. Even though we did have this bullish jobless claims report, prices are approximately at the same level now as where they were when this report came out. So we'll see if this develops into anything substantial. However, this market seems to be almost entirely underpinned by all of the Fed accommodation. Don't forget, they are purchasing $85 billion in treasuries and mortgage-backed securities on a monthly basis, much of which apparently ends up supporting stock index futures. Over in the currencies, seeing the dollar index advancing to a new high for the move. Of course, much of this linked to the jobless claims report coming in better than expected, as we just mentioned, but also interest rate differentials remain bullish for the US dollar. Seeing some pressure in the euro currency. We did have Greek unemployment increasing to a new high. Also, we had retail sales in Spain coming in on the weak side, so that undermining the euro currency. Over in the Australian dollar, good gains today being linked to much better than expected employment numbers, with monthly increases in numbers as much as 71,500, so that very much a supportive factor for the Australian dollar. Seeing the yen and the British pound near 2.5-year lows as interest rate differentials continue to undermine these two currencies. We feel that longer term, the trend is still lower for the pound and the yen. At the same time, we feel that the long-term trend on the dollar index is higher. So nothing has really changed in our long-term view. Expect further dollar gains, lower prices in the pound, lower prices in the yen. And credit futures market under pressure with the jobless claims report coming in bearish for the credit markets. We are very close now to 11-month lows in the 30-year bond. So nothing changing there as far as our long-term view. The main trend on the credit futures market still appears to be lower. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.